world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Charlie Delingpole. Charlie is the founder and CEO of ComplyAdvantage, a global AML, sanctions screening, and transaction monitoring company. Backed by Balderton and Index, the latter of which led a $30 million Series B in the company in January, ComplyAdvantage is scaling beyond financial services to deliver real-time compliance monitoring across industries. We're joined in today's conversation by Aman Ghei, a principal at Finch Capital, one of the most active early-stage fintech funds in Europe and Southeast Asia. For all of our past episodes and to sign up to our newsletter, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Charlie Delingpole and Aman Ghei. Charlie and Aman, welcome to Rebank.
Thanks to be here, Will.
Great to see you, Will.
Great to see you guys too. So all listeners out there, get used to Aman's voice because you'll be hearing it more often. He's going to pick up the brainy VC side of a lot of these conversations and do some interviews himself, which I think will be really, really interesting. He brings phenomenal background and perspective, Facebook, Excel, and is currently actively investing. I think Finch, I discovered this week, is currently the most active European fintech fund.
Yeah.
Is that right?
Yeah. Well, Series A stage.
Series A
we've
stage.
done over 30 deals now in the last 5 years or so. So
All right.
Exciting.
Absolutely. And Charlie, I think our longtime listeners will know your backstory. So it must have been close to 2 years ago when we first connected to kind of tell the ComplyAdvantage story. And I think also get into some of your prior entrepreneurial work. But today, long overdue, an update on ComplyAdvantage and some of the progress you guys have made recently. So we're sitting in beautiful new offices, which I think you guys said you moved into about 6 months ago, post a massive Series B that you guys raised, led by Index. Is that right?
Correct, yeah.
All right. I could ask you so update me on progress, tell me a bit about how things have been going, but instead I would refer listeners back to the first episode we did with Charlie around ComplyAdvantage. And the question, Charlie, that I would ask to open it up is, take us back to that meeting or series of meetings with Index and the vision that you outlined in those conversations. What was ComplyAdvantage when you walked into that room? And what was the vision that you were presenting?
Yeah, so great question. We announced our Series B back in December. So we started talking to Index, I guess, around the B like a year ago now, right? So we raised $30 million back then, and we've been very busy investing that in the past few months. I started the company when I first met you back in 2014, and we've basically been doubling headcount since then. So we're now 250 people. I first met Aman in 2010 when I was doing something else. But I guess the same problems that I faced when I first met Aman at Market Invoice, and we pitched Aman back at his previous employer.
I think you told me that, and he turned you down or something.
Yeah, he was like, Charlie, not quite.
Maybe that's why he didn't want to take my money the second time.
The genesis of the problem was building a kind of peer-to-peer lending platform and having to billions of pounds flowing around to
this
companies.
This was Market Invoice.
Yeah, exactly. So that was the kind of and building from scratch all of that, right? And having to onboard investors giving you millions of dollars from all over the world, and then also having to disperse that money to hundreds of small companies all over the UK. Yeah, so I think huge amounts of money flowing around, difficult problem, and therefore the challenge was, am I going to jail? If you're taking money from a Russian family office domiciled in the Cayman Islands, is that money like linked to Putin, or like who are these people? Is it legal, right? So I wanted to build a company which could solve those problems, because I think, as you've seen firsthand on the coalface, the rise of fintech, and as Aman has seen Finch with regards to like your 40 massive Series A's, both of you know like firsthand that the problem that all these companies face very early on is going to be around, are my clients terrorists or money launderers, or the AML problem. So I guess what we built out in the past like 4 years since we met then is a solution to the really core problem of, is this person bad? And we've made that really sophisticated. But then to go back to your question in terms of where does it go from there? So I think what we've done in the past year is it's going to really invest in the products and the scalability, in terms of, rather than handling a few million transactions, being able to scale horizontally to handle hundreds of millions, clients demand like 100% uptime. So a huge amount of the actual work we've done is completely invisible in terms of the actual end product. You can have teams of people working on functions and features which are invisible, right? So that's one thing. So kind of like enterprise grade, like scalability, quality. And then there's the kind of more tangible, exciting things and the kind of roadmap to get investors to salivate. I can kind of come on to those in a bit.
Charlie, how did your vision kind of evolve? As when you started the company, it was about, as you mentioned, trying to find people on this list that may exist or not, versus I guess where you are today.
Yeah.
A lot must have changed in terms of, you want to be $1 billion business.
Yeah.
Has that thinking evolved, or have you stayed core to that mission? And how do you go about kind of planning the next 5 years versus looking back at the last 5 years?
The core thing we built today, like that was obvious on day one, but has taken us like it's just taken 5 years to kind of refine, right? As in, even with hundreds of people building that and refining it and scaling it and being able to make it robust, and like even today it's not finished. As in, there are kind of tremendous barriers to entry around building that. As in, the sheer breadth and depth and quality and timeliness of like, I think I would never have started this company if I really understood the kind of like key parameters around that, right? So even the core products we were building, I mean, we set out to build like 5 years ago, aren't finished and will never be finished.
Just on that, was your pitch to, going back to Will's question, was your pitch to Index different to your pitch to Balderton, for instance?
I think so. We raised our Series A when we had like 14 people and like 500,000 ARR, right? So we were kind of tiny at that stage, right? So we didn't have large amounts of revenue, whereas I think like a year ago we had more than 100 people, right? So, and we had like how many 100 clients, right? So what we set out to achieve when we raised our like 8 million A, we kind of begun to achieve when we raised our B. If you invest $30 million in a Series B company, you aren't doing it just to kind of make it slightly better. You have to have some sort of like, you want to see the continuation of the growth rather than the flattening out of the S-curve, right? So yeah, I think there's still like a huge roadmap ahead of us.
How do you look at the competitive landscape, right? The solution that you're providing versus what's out there versus the demand from the incumbent and, in fact, emerging financial services industry for that service?
At JP Morgan, I was doing like TMT M&A, right? And the biggest components of the FTSE in the UK were Reed Elsevier, Reuters, internationally companies like News Corp, like with Dow Jones. So it was the kind of large B2 medium publishers who had like good businesses, right? And so when I left Market Invoice, I encountered companies that were clients of these companies, and you could see that these were like interesting spaces, right? And also I could see from my first company in terms of building the guts of the systems, how you could compete with them, right? So the main competitors were Reed Elsevier, like, as in LexisNexis, Acuity, Reuters, and then companies like RDC, right? And then Dow Jones. So kind of at the core, it's like a data company. And it's a whole new way of building data, as in rather than using researchers, it's about automation and algorithms and data pipelines.
How do you feel about your competitive positioning today vis-a-vis those incumbent providers?
I think you have to like respect and fear your competitors in terms of the sheer scale that they have, the level of resources, the intelligence they have. So I think, at least with Market Invoice, you could see that the larger competitors like RBS, for instance, were normally slow to react. And if you read things like Innovator's Dilemma, you can think about the competitive response of incumbents and how they react to a particular market, right? As in, I think given the scale of the market, they shouldn't really care about a kind of small company, but it's like a very small part of their overall operation. And then in terms of the kind of competitive battle actually around brand or around incumbency and like all these things meant that it shouldn't necessarily be of great concern to them. On the other hand, companies have failed to eliminate terrorism, money laundering, financial crime, and therefore someone else should have a go, right? And therefore, I simultaneously think that there's a right that we should exist, but also think that they failed to an extent, and therefore someone else should have a go.
Did you get a lot of, oh, you're trying to sell to financial institutions, what makes you kind of think you can do that?
Yeah.
And you need resources, and I think investors love short sales cycles, and financial institutions are notorious for long sales cycles.
Yeah.
Particularly because you're going into the transaction real time.
Yeah.
You're not asking them for a CSV and doing your checks after that. What was your response? And what is it? I'm sure it's still a valid question today.
The classical response, if you read any kind of like SaaS blog, is that there is like a ecology of financial services companies in terms of size that you can you can go for frogs, which are numerous but small morsels. You can go for gazelles, which are harder to kill but a bigger meal. Or at the extreme end, you can go for whales, which to hunt successfully, you need a whaling ship with a massive harpoon and a big strong hull because Moby Dick can destroy you, right? So I think deliberately I understood like UK fintech because I'd been in it since before it was called fintech, and therefore that's the market I understood and that's the market that I built towards. I mean, looking at the way the market's evolved, there have been a few different entrants into the market, and you can see the success of their strategies. So like there was one company in the US that tried to enter, and like even though they spoke about the problems of selling to large corporations, they themselves sold to large corporations, and I think they've struggled as a result because you become beholden to them, right? So especially now we have some big clients, right? And for instance, some of them are like, listen, you can't use Amazon, you can't use AWS because Walmart is a client. And therefore Walmart are vetoing it, so like actually you have to start, or you have to put it on premise, or, I think.
Is SaaS a little bit of a fallacy when it comes to financial software?
The question is like, if you get a client who's like, if you do this painful thing, then we'll pay you lots of money for it. So you have to be able to like, whichever product you're building, you have to think, do I actually want to do this? And how can I metronomically, systematically please the largest number of people based upon my ability to service them with a single product? So that's the kind of equation, right?
And in your head, like, okay, you don't have to give me an exact number, but what is that? Like, is it 500,000, $1 million that kind of moves the needle in terms of, hey, this is interesting enough for us to spend some time on-prem, or hey, we want to stick to our core principles of delivering via AWS?
I think it depends on like
where you are.
It's
probably
ACV as a percentage of ARR, right? So if you get ACV, which is like 10% of ARR, then you're like, okay, actually that's interesting. And also if there's like numerous companies more similar to them, right? I mean, the other question is prioritization geographically, as in if you sell to a company in the UK, there might be 5 other banks or companies of a similar size, and they'll pay like 1x, right? Whereas you sell to like Americans, right? Everyone loves Americans, and it might be like 5x the price ticket, but then there might be like 1,000 times more companies in the US, right? So, and because you're based in the UK or you have a tech team in the UK, you can't impress them by showing them like to your team, or they can't feel they haven't got as much connection with the team. So I think like part of it is forcing the team to focus more internationally rather than on domestic market when like they have the demands face to face from the clients and it's more recent in their head. So I think geography, despite being like less relevant now, is still extremely important in how you build your company internationally.
You mentioned Walmart before. I won't ask you to necessarily dive into any specific client in detail, but Walmart is a company that's clearly not a bank. So anyone who maybe previously would have thought of PEP and sanction screening as being a bank-related issue, you're clearly extending your market footprint from there. So what sorts of services would you offer to companies that aren't banks, and where do you see opportunities to add value there.
The purpose of starting the company was to help everyone with this issue, and therefore, like, one of our first clients was FedEx Zimbabwe, right, who couldn't deal with the Mugabe regime, right? So I think all companies will face an evolving landscape of risk and associated different types of risk. Like right now, it's kind of reputational and regulatory risk, but then it could be credit risk, it could be fraud risk, it could be risk related to insurance paying out. So I mean, any form of finance has a return has a risk linked to it. But then it's also kind of how you identify or get information about companies. So it's kind of risk and identity and the ways those are linked.
How do you think about the value chain, Charlie? So there are a couple of players in the value chain, right? So I think they're the typical document checker type businesses, the Onfidos and so on of the world. And then maybe you come in after that. Do you want to own the entire value chain, or how do you kind of see this playing out?
What we don't do is identity, in terms of like, we don't do is this person who they say they are. Like, that isn't something that we're going to do or ever going to do. So
do you want to do that or no?
No. So like, what we're trying to do is understand risk, right? So, of people and companies. So the kind of Onfido
passport verification, yeah.
That's a very different business and a very different technology, and they do that very well. So we will work with them and companies such as those. So once you've done that process, then at that point you can use our data to verify that person is who they say they are. But we aren't ourselves ever going to do the kind of identity, the AI around facial recognition and fraud detection for that. I think that's a very tricky, challenging problem which they've invested very heavily in, and not something that we'd ever want to do or offer. But what we do is we have partners who buy our data and embed it in their platform, and therefore the client will have it where it's relevant as part of that journey, right? So we have clients who embed our data in their processes and systems.
Aman, have you guys invested in any reg tech companies, or is it a space you follow?
We invested in a company called SafeNet. I don't know if you've ever come across them, but they're essentially document verification. But the angle they have is they're actually a financial institution. So they work with some of the top banks to actually do all their onboarding in a financially compliant way. So it's a bit of a niche in the market. I think there are two ways to look at this market today. Is probably you have the low touch kind of SaaS players that, hey, I want to do basic verification on my seller, buyer. This is a marketplace. What is the API that I can use to quickly integrate and get a pretty good result from. And then you have kind of one step further, and these people have been in the news, the Revolutes, the N26s of the world, that should have a lot higher bar to the kind of people they let on board. But I think, as Charlie was saying, that's one aspect of the problem, and then you kind of have this entire different problem that comes into place when you start offering them the ability to trade in crypto, where they're getting their funds from, and constantly kind of monitoring that. But that's a different problem that Charlie is solving versus, I guess, the SafeNets of the world.
The identity part we have to do is around, if there are 100 Will Beesons, right? Which person globally is this person? Which country? And if there are 100 companies called SafeNet, right? Then which of the 1,000 companies called SafeNet is this person? And therefore what we want is metadata around that, right? And then linkages too, right? So if this person is like linked to like an Albanian gangster, right? So there is an identity part in terms of the entity resolution element. Mm-hmm. So that's the kind of, so it's kind of, and it's risk attached to those identities, but that, even though it's the same word, is actually a very different concept to the kind of facial, like biometric identification.
Yeah. Hey, do you see yourself like building this global repository of data? And I guess, do you intend on sharing that? I can understand why it could also be a little bit of a competitive advantage, but we were talking a little bit before about credit bureaus. The one thing credit bureaus do is share data with each other. How do you see this kind of evolving in terms of, you're obviously building a pretty substantial kind of client base and have access to proprietary data. do you see yourself sharing data, I guess, for the betterment of catching terrorists? And
Yeah, I think what we envisage is as we get bigger, I think there are definitely like strong network effects from having that shared data set and shared patterns of learnings, and where possible, we try and embed that in. And there are numerous dimensions of that, but it's reasonably difficult to engineer. But I think given our architecture, that's very possible.
So apart from just kind of like money laundering use cases, what are some of the other like big market opportunities that you see for your product as it currently stands?
I think with the corporate data, I think there's like numerous different dimensions of that. So, and that's kind of linked to what we do in terms of, is this company like within our risk framework in terms of like fraud or claims or identity theft or that whole spectrum of, I think there are kind of numerous adjacencies with regards to workflow that any institution has, linked to the same data set as well. So I think that's definitely one element. So kind of the corporate risk analysis, and that also backs into the same data set with regards to subsidiaries of sanctioned entities and politically exposed like state entity directors. So it's kind of one and the same data set. So having that broader data set is very important and is a natural adjacency which kind of feeds into that.
do you see the company side really breaking through now? So people wanting to understand not so much is this person on a PEP list,
Yeah.
but is this entity I'm doing business with legit? Should I insure it? Should I do business with it? Should they be my supplier? There's a whole value chain here.
Supply risk and I think like again the whole architecture takes a huge amount of time to be able to like have live and ingest. But I think over time, yeah.
Hey, stepping back a bit, Charlie. So, we spoke about kind of market invoice and like what did you do differently starting off ComplyAdvantage that you didn't do at Market Invoice or even at Student Room? I know you were young at that time, but
you can break that question into like a few different dimensions. So I think the first thing I did was I was very thoughtful around the product I built and the market I went after in terms of, as in, I kind of came back from like Mount Kilimanjaro with like 30 ideas, right? And I kind of went through systematically, like I wrote kind of like 20 pages on each different like sector, right? And I went through all these different areas, and then I went out and spoke to people and met people, and like a kind of consensus came across this particular area as being a good area, right? And then specifically looking at this area, which specific product, as in there was a problem to be solved, but then precisely how do you do that? And I think the first question you asked me in 2010 was CAC LTV unit, like all things that you interrogated me back on, I obviously thought very early on about, right? In terms of, not that I wanted to raise any money, right? As in, I didn't want to raise the money at all if I could avoid it, right? I'd much rather, to
100% of your company.
Yeah, I'm much rather to build a really obscure company that no one never heard of, that could just exist, like, and not have I just wanted to build a great company, right? And enjoy doing that. So, and also to solve a problem, right? And also to do something kind of morally worthwhile that was kind of like I could believe in, and like, but also to be interesting in terms of like the challenges of dealing with like Arabic name matching, and you have to keep yourself motivated, right? As in, like, of all things you could do, you have to love what you do to keep yourself like fired up, right? So 95% of that was like the choice of the market and the choice of the product and having conviction around that, right? As in, if you look at the startups you invested in, how many deviate from their core principle that much? And then if they do deviate, then each pivot is expensive in terms of energy and money and cap table. So I think like
getting it right first time is important.
Yeah, but saying that, I was actually pretty quick. As in, I found a client who needed it, and if I hadn't have found them, it would have taken me like another year to get, as in, to have credibility in this space is very challenging, even though I had credibility like generally.
Did you have to go through any pivots? I mean, it might not have been kind of major, but like, what were some of the?
So I actually built a company that failed in between, right? So like when I was climbing Kilimanjaro, I was sharing this tent on the mountain with this guy who did like heavy industrial vehicles like rentals, right? And he was like, you have to build it. So I built this thing, but I spent like $1,000 in a week, and I figured out from the data that it didn't work after a week, right? So I failed at building a company, but it was only like 4 days, but I built it myself. I coded everything myself. I launched it. I tested it and decided it was rubbish within a week because the numbers didn't work. So, like, as in, I think once you as soon as you discover the numbers for a company post-launch, then thing changes radically, right?
Yeah.
I think.
Yeah. At ComplyAdvantage, has everything kind of been, whether it's product or people or like what have been some of the challenging kind of decisions you've had to make in the last kind of 5 years?
How many people have you fired?
That's a good question, actually. I'm sure you fired people.
But I think relative to what I've been through before, it's been like play sailing, right? I think once you've dealt with like defaults and debt collection, right? Or like I think anything else is like a dream, right?
Yeah. It depends on how quickly you hit kind of that product fit, right?
But I think, but there was still a lot of laboring in obscurity. But I think you have to have conviction around what you're building is actually correct. As in, I think if it's like a asymptotic curve and it's going to like that, and this, then like if you're doubling every year, then and it's a very small base, and you're still working in like a squalid like bedsit in Victoria before you actually kind of get to this stage, right? So like there's always a foundational layer which on the outside appears very small because it's still kind of in the gestational phase, right?
Yeah.
Question for both of you, maybe Aman for you first. How have you seen the RegTech space evolve over the past few years?
Yeah, I think it's been an interesting time. I think Charlie's company is probably one of the few companies that has cracked, I would say, the product market fit problem. I think if you look at some of the biggest compliance kind of companies, you can call them products, IBM Archer, Metric Stream, these guys have been around for a while. And they're so embedded into people's compliance system that it's almost a consultative kind of job to go out and sell. So not many people have figured out kind of let's call it SaaS, but quasi-SaaS type approach to really solving this problem repeatably. And I think kind of Charlie's done a great job there. I think what we probably saw maybe 2 years back was this mantra of startups targeting the GDPR space. I think everybody was just super excited about GDPR is going to be a massive problem and no one is compliant and we're going to be this.
It's kind of similar to open banking.
Exactly.
It was like flagged by the government as like an opportunity and deliberately architected as being a low margin industry, right?
Exactly. And I think the problem is that I think within, let's say, GDPR, I think GDPR is still an issue, but there is a subsect there which I think someone needs to crack. Now, I think kind of if Charlie and ComplyAdvantage went out and sold compliance, I think they would have trouble. But I think they've figured out this pretty big niche in terms of, helping people catch these criminals, fraudsters, terrorists, scaling that across not only people but companies and moving forward. So I think there's been a little bit of a kind of product fit issue in the RegTech space, and people just need to figure out what the little bit more niche. I think people are just too interested in solving kind of multi-billion-dollar companies without focusing on this is the product that I really need.
I mean, I suppose it's a fair point, right? Because you have to productize compliance for any sort of like SaaS model to ever work. Productizing kind of suggests that the buyer is then kind of like taking on the burden of using it the way it's supposed to be used, which means that it has to be kind of synthetic enough and understandable enough for them to effectively use to solve their problem, right?
Yeah, totally. I think actually another one that you might know because I think JP Morgan invests in them, but BehaveFox, or maybe I'm pronouncing the name wrong, but they've basically gone into a very specific environment, which is trading desks, and said, we're going to monitor people's behavior. It's compliance software. Or, we're going to make sure they're compliant the way they execute trades. And
that's like insider trading and
exactly.
Yeah.
That one's really interesting, right? Because they're not trying to replace an existing like tool that a compliance officer is using. It's like this is a new way to deal with I wouldn't call it a new problem, but it's a problem that's kind of faced increasing scrutiny.
Yeah. But it's super specific. This was what I'm trying to say. Is people kind of can talk about that problem as opposed to grand gestures, and I think that's kind of the key in the regulation space, where I think people are probably just getting a little bit lost right now. in my view. But I think that'll probably
I
change.
mean, I think like any startup, you need like absolute intellectual clarity over like how the fog of war will disappear. Like I think any early stage business, like pre-seed, like deep pre-seed, you need to have a vision of precisely what you're doing, and you need to. So I think having that conviction about how things will evolve is actually quite challenging, right?
Yeah, totally. I think kind of there's this preconceived notion, maybe rightly or wrongly so, is if you're building infrastructure software, which is a little bit kind of to do with regulation as well. You need a lot of capital because sales cycles are going to be long and you just need to be patient. But I think, again, people like Charlie have shown that that's really not the case. Of course, you need to be efficient in terms of selling, but if you can find kind of the sweet spots that really hurt people, then you can be very quick in a very capital efficient manner. But I think just speaking of capital efficiency, you obviously have a lot of people here in the UK, over 100. You have a team in Romania. How's that worked out for you? I mean, obviously Romania is now on the map because of UiPath as well.
Yeah.
Has that been a pretty important kind of function in terms of scaling kind of technical teams, or how do you see that?
I think financing wise, we have been like deliberately from early on, like hyper aggressive, as in it's always been like, either this is huge or we burn it to the ground, right? As in, I think you have to be like, with any project, I think like you have to be willing largely to forgo everything to succeed, right? As in, to win, you have to be like very willing to lose, right? So I think, and the financing and pricing model means that we have been able to invest very aggressively, but I think also we raised like $40 million too, right? So it's not as if we haven't invested, right? In terms of Romania, I realized when we were small, just the sheer number of people we needed to get things done, and the sheer like massive bandwidth that we like. I think we have like close to 100 people now working on some platforms in Romania, right? And I think we went there because it was like, it reminded me of like Cambridge, right? As in, you got tons of universities, tons of like ambitious tech savvy people, not because it was like cheaper, just because it was like they're great people.
Yeah.
And I think like we have people from like high frequency trading firms, like in terms of the architecture and understanding the complexity of the systems. I think what we've done in terms of the sheer breadth and like the audacity of doing things which like wouldn't have been possible like 4 years ago, and even in like a small subsection of the system, and looking at the kind of some of the people, what they produce now in terms of like architectural working docs and rationales behind changes, in terms of like a lot of it is pretty hardcore, right? But also like amazing to read, right? So I think like, and especially now we've got lots of like senior engineers who really know their stuff, right, across the board in the whole company, right? I think just if you're going to make that quantum leap to being like building something really powerful, you need a kind of like a CTO caliber person. Given how many squads we have now, you need like great leaders in every single area, right? So, and that doesn't come cheap. So, but it's just kind of the sheer quantity of people and the caliber, and also the retention too, right?
How do you inspire and incentivize people like that could be a CTO of another company, and you know they're leading a team here?
So we've had like very good retention, and also we managed to attract a lot, like double team size, and I put down to like five things, right? Firstly, the kind of moral case for what we're doing in terms of people are motivated by not allowing people to do human trafficking, wildlife smuggling. In Romania, it's corruption. In the US, it might be like political corruption, terrorism, like, you know, you can't feed your family because remittances are getting stopped because of Al-Shabaab in Somalia. So, and that was the first client, right? So the moral case for what we're doing is like, you know, versus something like, you know, like payday loans or ad tech, right? So people, particularly the younger people, want something they can believe in and go to work and fight for, rather than just like money. Secondly, I think in terms of like it's interesting, right? Rather than in terms of the raw complexity of like Arabic name matching, and we have clients in 70 countries, all kinds of fintech clients that are super interesting in every single segment. It's just a really interesting topic. Thirdly, like technology in terms of noise graphs, AI, cloud, like, you know, greenfield, every day is a new paper from DeepMind you can apply. I think fourthly, the team in terms of the people we've hired, in terms of the culture and the behaviors and that we instill. And then finally, also, it's kind of a good, stable business that's like with a good foundation. And therefore, you can, with like $50 million, you can afford to invest, right? So that's kind of the key intellectual arsenal we use to hire.
Hey, talking about the industry, Charlie, like what's been the biggest pushback you get, particularly from kind of the tier one banks that you talk to today?
I think early on we were kind of reluctant to take on tier one banks because like it's the whale analogy. I think, and also which product is going to land, right? Like we could have gone like on-premise, consultancy heavy, like Hadoop cluster analysis super early on, right? But that would have been a different company, right? So, and there are companies that adopted that strategy. Instead, we're a data provider. We're going to build the best data set, and that's going to be scalable. And like it came with an intellectual conviction that the problem wasn't so much the internal data, like it was basically with the core data set and the way it's collected around researchers. So, and that informed our strategy in terms of we didn't want to go to the large consumers first. We wanted to like build it up before we were ready. So I think now we're ready and we're getting like good traction with tier one banks. So I think, but that's taken like 5 years to evolve the product and evolve the architecture and fitting into tier one banks and also like doing things like ISO, right? And doing all the Moby Dick analogy, like it requires vast amounts of resources. But I think there's sufficient demand for what we're building to make it viable.
And where did you guys land on pricing? Because we all know kind of financial institutions spend the most on software as a vertical than anybody. That doesn't mean that they'll pay a lot, but how did you guys figure out pricing, particularly early on and today as well? I
mean, my conviction around pricing was that I wanted money to invest in building great products. I wanted money to be able to hire the best people. And therefore, I would prefer to charge more rather than less because I want funding for the company. I think also, like, for what we're selling, people generally don't want discounts, right? They want the best product, and therefore, and also it's a small part of the overall cost, as in the biggest cost is people. So we'll price, like, we won't be the cheapest, right? We'll try and price what it's worth to people, and we want to build something distinctive, and for everything we do, we want to be the best in the world.
That to me sounds like as good a place as any to wrap up. Charlie, congrats on all the recent progress, and
super excited to hear about your progress.
Yeah, definitely. Aman and Charlie, thank you very much for joining us today.
Thanks a lot.
Thanks.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.